All right, everybody, buckle up, because today we're doing a deep dive into the wild world of trading psychology. And with me are two incredible guests.
So good to be here.
We have Sam and Steph, both with, well, decades of experience in the market. Sam, 20 years, right?
20 years, yeah.
20 years, that's incredible. And Steph, you're at 15.
15, yep.
15. So we are not talking theory today.
No.
We are talking real world, in the trenches,
Right.
how to master your emotions. Because you're here because you want to master the market. And we all know that often that starts between the ears. Would you agree?
100%. Yeah, the psychology of trading is really the secret sauce, I think, for being successful consistently.
Love it. Okay, so that's what we're diving into. How to win in trading by not letting your emotions call the shots. And that is hard.
It is very hard, yes.
So where do we even begin?
Well, I think you have to start by kind of wrapping your head around the fact that the market does not care about your feelings.
Zero chills given.
None whatsoever.
Okay, so how do I even begin to approach that? Like, what does that actually mean for me as a trader?
Okay, so think about it like this. You're watching a roulette wheel, and red comes up 5 times in a row.
Okay.
10 times in a row. What's your gut telling you?
Black is due.
Right.
Place your bets.
Yeah, you want to put it all on black because you're like, has to be black next time.
Right.
But that's the gambler's fallacy, right?
Okay.
And that's what we do in the market. Just like each spin of the roulette wheel is independent of the last spin.
Right.
Every single trading day is independent of the last. So just because a stock went down yesterday doesn't mean it's going to go up today.
Oh, so you're saying that past performance is not actually indicative of future results?
It is not, though. We want to believe that it is. We're always looking for patterns, right?
Yeah.
We're trying to find that edge. And so we start to see these patterns that really aren't there. And that's where our emotions come in. We get fearful when we should be greedy and greedy when we should be fearful.
And we're not just talking, a little bit stressed out. I mean, we are talking full on fear, greed, FOMO, the whole emotional bag of tricks is in play when it comes to trading.
Oh, yeah. I mean, I've been doing this for 20 years and I still feel it, right? Like when you see your stock dipping and you're like, oh my God, is this it?
Right.
Or when you see everyone else talking about a stock and you're like, oh, I'm missing out. I got to get in on that. It's real. It's so real. And it can really get you in trouble in the market, right? Like, I think, I've definitely fallen prey to that fear, like holding on to a losing trade for way too long because I'm just terrified of realizing that loss.
Cut your losses.
Right, exactly. But then, on the flip side of that is the greed.
Oh, yeah.
When you see a stock going up and you're like, oh, I got to get in on that,
Right.
I'm going to make so much money and you end up risking way more than you should. And then
Chasing those wins.
you get burned.
Right. And that's what I think is so fascinating about trading psychology. It's like we all kind of know logically these things. We've heard buy low, sell high. We know, like, don't, put all your eggs in one basket. And yet it's like there's this other force at play.
Right.
It's almost like we need to build a different set of muscles to combat that, our natural impulses.
Well, yeah, I think that's a great way to put it. It's like building that discipline, right?
Yes.
Having a plan. And it's not just about, writing down like, I'm going to buy this stock here or whatever. It's really, it's deeper than that.
So talk to me about like a real trading plan. Like, what does that actually look like? Because you're right. I think sometimes we can oversimplify it.
Yeah.
In our heads, it's like buy low, sell high. But like, what are we missing?
Well, it's about knowing your risk tolerance. Like, how much are you actually comfortable losing on any given trade?
Ooh, the dreaded question.
Right. Because if you have to define that, and you have to be okay with it before you even enter the trade.
Right. Which is sometimes hard because we don't want to think about losing.
We don't know. Nobody wants to think about losing.
Right.
But you have to. It's like, you wouldn't get in your car and just start driving without knowing where you're going.
Right, not a destination, yeah.
Yeah, you got to have a destination in mind. So your trading plan is your map, right?
Right.
It tells you where you're going. It tells you, how much risk you're willing to take to get there, what your entry and exit points are going to be.
Love it.
And it also, helps you to kind of keep your emotions in check, because if you have this plan
Right.
and you're sticking to it, you're less likely to make those kind of impulsive emotional decisions.
Right. So it's like it's almost like, I don't know, if you were rock climbing, you would have, your harness and your ropes.
Right. Exactly. Yeah.
And it's like, if you fall, which you're probably going to fall at some point,
Mm-hmm.
you don't want to fall all the way. You've got to have something to catch you.
Exactly.
So the trading plan is kind of like your safety net.
Exactly. That's a great way to put it.
Okay, love it.
And then, the other thing too is this idea of R. Have you heard of using R as your risk unit?
I have, but some of our listeners might not have. So talk to me about R.
So R is basically just a way to kind of quantify your risk on each trade.
Oof.
So let's say you decide, my risk tolerance on any given trade, I'm willing to lose $100.
Okay.
So that's 1R for you.
1R, $100.
$100. So then when you're evaluating a trade, right, you're not just thinking about how much money you could make, but you're thinking about it in terms of R. So if you see a trade and you're like, okay, this has the potential to go up 3R.
Okay.
That means you could potentially make $300. But on the flip side of that, you also have to think about, okay, what if I'm wrong?
Right.
What if this trade goes against me? And if you're risking 2R on that trade, that means you could potentially lose $200.
And that's where we sometimes get into trouble, I think, because we don't do that math ahead of time.
Exactly. We don't think about that downside.
Yes.
We're so focused on, the what if I'm right?
Oh, I'm going to make so much money.
Exactly.
It's going to be amazing.
And so thinking about it in terms of R just helps you to kind of put things in perspective, right?
Yeah.
And it makes you really think about, okay, is this risk worth the potential reward?
It's almost like putting up those guardrails,
Exactly.
so that you don't, because our natural inclination to be like, oh, this could be a big one. Let's go for it.
Right, exactly.
But this is like, no, we've got to think about this.
Slow down.
Yes.
Think about it.
Love it. Okay. All right, everybody. So we've got our plan. We've got we're thinking about all of this. What's next?
And then it's all about kind of, building those mental muscles, like sticking to the plan.
Sticking to the plan.
Sticking to the plan is hard.
It is hard because it's emotional.
It is very emotional because, again, when you're seeing red in your portfolio or when you're seeing everybody else make money on a stock that you didn't get into, it's tough.
Right.
It's really tough. So that's where those strategies, that we've talked about before, the taking breaks,
right,
the journaling,
yes,
the learning, the constantly learning and kind of keeping yourself educated on the market, those all play a role.
It's like training for a marathon.
Yeah.
You can't just, one day decide to run a marathon.
Right.
You got to train your body.
Yeah.
That's training your mind.
It is, yeah. It's like a mental game.
Right.
For sure.
Okay, so we're training, we're doing all the things, we have our plan, we understand we're thinking about our risk.
Yep.
Inevitably, we're going to have some losses, right?
Yes.
Like even the pros, they don't win them all.
They don't. And, I think that's something that even seasoned traders sometimes struggle with is this idea that, we should be winning all the time. Or, we see somebody else, like these traders on Twitter or whatever, it's like, oh, they're winning all the time.
Right.
And that's just not realistic.
Right, it's not the whole picture.
It's not the whole picture. And so you have to kind of accept the fact that you're going to have losses.
Okay, so how do we accept that? Because that's a tough one.
It is a tough one. So I think one way to think about it is to kind of build that into your strategy, right? So there's this trader, Mark Minervini, really, really successful trader. And he talks about this idea of building failure into his system.
Building failure into a system. What does that mean?
So he knows going into every trade that a certain percentage of his trades are going to be losers.
Oh.
Even the trades that look amazing on paper,
right,
he knows that some of them are going to lose. Statistically, yeah.
Right.
And so he's not afraid to take those losses because he knows that the winners will more than make up for it.
Okay.
As long as he's managing his risk properly.
It's not about trying to avoid losses altogether. Because that's impossible.
It's impossible. It's about managing those losses, making sure that they're,
right,
significantly smaller than your winners. It's like, it's like surfing, right? Like you can't control the waves, but you can control how you ride them.
I love that.
Right. And so it's the same thing in the market. You can't control what the market does,
right, but
you can control how you react to it. And I think one of the things that can really trip traders up is this idea of kind of like short-term thinking versus long-term thinking.
Okay.
So, imagine like a bell curve, right?
Okay.
So in the middle, you've got your kind of like your average trades, right? Some are up a little bit, some are down a little bit. And then on one end of the bell curve, you've got your big winners, right?
Right.
The ones that make your heart race. And then on the other end of the bell curve, you've got your losers.
Right. Okay.
And the problem is, if you're only looking at a very small sample size of trades,
Right.
you might get a distorted view of kind of like what your actual performance is.
Oh, so you're saying, like, if you only look at, like, your last 5 trades, you
Exactly.
might get a very skewed perspective.
Exactly. You might have just gotten lucky and you had a couple of winners in a row.
Right, or unlucky.
Or unlucky, and
Yeah.
you had a couple of losers in a row, and you start to think like, oh my God, I'm terrible at this.
Right.
I need to give up. But if you zoom out and you look at kind of like the bigger picture,
Yes.
that's where that bell curve starts to like even out, right?
Right. The more data points you have.
Exactly. Yeah. And so over time, as long as you're managing your risk, you're sticking to your plan, statistically, the odds are in your favor.
Love that.
Yeah.
Okay.
You should be winning more than you lose over the long term. But you have to be able to kind of weather those ups and downs. And that's where that emotional discipline comes in.
So it's really about trusting the process, even when it feels uncomfortable.
Yes, 100%. It's trusting the process. And it's also, realizing that every trade is its own entity, right?
Right.
So you can't predict the outcome of any single trade, no matter how good it looks on paper.
Right.
Anything can happen.
Right.
So you have to be okay with that. You have to be okay with the fact that you don't know what's going to happen and just focus on what you can control.
Which is the process.
Which is the process. Exactly. Your
Hmm.
risk management and your emotions.
Okay, so it's interesting because we're talking about mastering the markets.
Yeah.
But it sounds like what we're really talking about is mastering ourselves.
100%. Yeah, I think trading is like 80% psychology
Right.
and 20% strategy.
Wow.
You can have the best trading strategy in the world, but if you don't have the mental game to stick to it, it's not going to matter.
It's almost like having, a Ferrari,
Right.
but you're trying to drive it blindfolded.
Exactly.
You might have all that power, but if you can't see where you're going, it doesn't matter.
Exactly. Yeah, you're going to crash and burn.
So good. Okay, so as we wrap up here, any kind of final, pearls of wisdom as our listeners kind of head back out into the trading world this week?
Yeah, I think the biggest thing is just to remember, the market doesn't care about your feelings, except that losses are inevitable. Don't beat yourself up over them. Learn from them, move on, and focus on consistency over those big, home run wins.
Love it, love it, love it. So good. Okay, everybody, so as you navigate the markets this week, remember, it's a marathon, not a sprint. You've got this. Take those breaths. Look at the long game and understand that, we're all in this together, kind of riding the waves.
That's right.
Awesome. Well, thank you both so much for being here. This was fantastic.
Thank you for having us.
And for everybody listening, we will catch you on the next Deep Dive.